If you would have invested $1 when it was given to you, you would have made $13,000 by now. One of the best ways to live well is to start investing early. It should go without saying that you need to accumulate a large sum of money, and investing your money is one of the finest methods to do this, particularly for the working class. You will see that if you start investing early, you will be much wealthy. Here is a great example for better understanding. If you decide to start investing $500 each month and get an 8% return, that would be great. If you begin saving when you are 25 and do not stop until you are 60, you will have $2.16 million when you retire. However, if you began investing at age 40 rather than 25, you would only be in possession of $0.3 million. Nevertheless, for the vast majority of individuals, this still remains the best course of action for increasing wealth and making sure you have a significant capital to use in tough times. In other words, you set yourself up for success by getting started early. Today's video will concentrate on some of the most significant investments and assets you can make while you are still young. Let us get started now. Index funds. The best investments you can make before reaching 40 are equities. Despite the fact that they carry a great deal of risk, they have some of the largest potential rewards. You will have lots of opportunities to make mistakes early on in your financial journey and grow from there. However, you need to make wise choices at all times. As measured against the benchmark S&P 500 index, the typical return on equity is 10%. Few investments will actually provide a return rate this high. When developing an index fund strategy, bonds can be a useful addition. Bonds are the most secure investment, but they also yield the lowest returns. Ensure that the weighting of the bonds in your portfolio is between 10 and 20% because your investment is safer. You may also give the percentage and adjust it to fit your level of risk tolerance. Although index funds for cryptocurrencies have just recently been released, they seem to be quite promising despite not having undergone extensive testing. The current return rates are exceptionally high, averaging between 10% to 15%. However, when the return rate increases, so does the risk. Less fees are charged by index funds, which is a huge plus. As the fees decrease, the rewards increase. In addition to diversification, index funds also have the advantage of frequently having low fees. As much as possible, avoid investment costs because they will quickly reduce your earnings. As you buy the index funds, be careful to think about the tax implications as well. Number 2. Real estate. One investment where you almost never go wrong is real estate. Real estate is among the best investments for a number of reasons. First off, there is frequently housing scarcity, and the value of real estate assets almost always rises. The first stage in real estate investing is home ownership. You incur fewer expenses when you own a home, such as lower rent. After purchasing your own home, you might consider developing more business properties. They could consist of multi-family homes, townhomes, businesses, and other types of real estate. There are still alternatives possible if you are unable to directly participate in the real estate market. On a variety of crowdfunding websites, investments can be made for as little as $500. The money would subsequently be utilized to donate money from new investors and buy real estate properties. These assets are known as real estate investment trusts, or REITs. Number 3. Self-education. The ideal time to begin studying is in your 20s, according to studies. A study revealed that your 20s and early 30s are the greatest ages to learn new things. Thus, now might be the perfect time to complete that extra degree. Your professional success might be aided by the importance of education, but you must understand that not all knowledge and education are helpful. Keep in mind that some research can be considered a hobby and will not likely be able to help you make money, so proceed with caution. If you want to invest in your education, start by thinking about successful jobs that you are familiar with. Further, this might be the best time to increase your financial literacy. Number 4. Startup business. You must aim to make early financial investment in a startup company. Why? Owning a business has countless advantages. You will be able to earn as much money as you wish with limitless ROI. Another investment you should make in your 20s is a new business. Even if it's not the next Amazon, the potential for an explosive ROI is enormous. Young investors have the potential to earn huge profits from their investments. The business does not need to start from scratch. You can invest in other people's businesses in exchange for stock in the company. An excellent alternative, for example, is to become an angel investor if you know the business owner. Your investment might be made in the form of a convertible note, which means that it might turn into a loan if a specific need is met. Crowdfunding is the replacement. Fantastic companies with a lot of promise are featured on a lot of crowdfunding portals. Make sure you have done a lot of research on the founder and are familiar with the company's history before investing in a company. Choose businesses with compelling histories and owners who have a degree of experience of business. You can also transition from being an accredited investor to a venture capitalist by working with a venture capital fund. For these funds, there are, nevertheless, strict guidelines and a low investment threshold. Number 5. Treasury Bills. Investors must purchase Treasury bills regardless of their age. There is no better time than when you are young to invest regularly in Treasury bills. Treasury bills are Treasury guaranteed, short-term financial instruments that are used to finance spending and manage the money supply. There are 3 different tenors for Treasury bills: 90, 182, and 364-day intervals. Everyone has costs to pay for, whether it be tuition, rent, or even professional tests. You can easily invest the cash you have on hand in Treasury bills and then withdraw it when the bills are due. Buying an asset to raise money to pay off a future debt is an example of the financial principle known as asset and liability matching. Treasury bills carry no risk at all. Your gains are assured, unlike other investment possibilities. Given that they offer well-accepted returns as well, why not invest in them? Number 6. Growth stocks and dividend stocks. We have been quite clear that when you are between the ages of 20 and 30, you should take risks since you still have time to make up for any losses. Therefore, investing some of your money in stocks is a terrific method to do it in a high-risk, high-reward industry. Growth stocks are securities with predicted yearly growth rates that are much higher than the sector average. These stocks produce more consistent positive cash flows and revenues as compared to their competitors. In contrast, dividend stocks are frequently those of established, stable companies. Therefore, their share values are less volatile than those of growth stocks. You should begin adding dividend-paying equities to your portfolio as soon as you can. If the businesses continue to function at their current levels, they will have the chance to provide a consistent revenue for a very long time. Number 7. Exchange-traded funds. Now, let us look at ETFs, which are similar to index funds. We previously looked. ETFs resemble index funds because they are collections of securities that include different assets like equities, bonds, and gold. Since shares are exchanged similarly to stocks on a market, shareholders can buy and sell them. Because of the adaptability, they are valuable tools for investing, whether in broad market indices like the S&P 500, in sectors like technology or health, or even in niche industries like social media or robotics. Global X Robotics, an artificial intelligence ETF, and iShares Global Clean Energy ETF are few of the largely chosen ETFs for investments. Number 8. Cryptocurrencies and initial coin offerings. Initial coin offers ICOs and cryptocurrencies have just lately piqued the curiosity of conventional Main Street investors. The ICO did, however, raise an incredible sum of money. Given that there are presently over 1,000 different types of cryptocurrencies in use, it is crucial for investors to understand the complicated investments, products, and degrees of risk involved. However, we are aware of the incredibly high returns. The possible gains range from 12% to 200%. ICOs have often performed exceptionally well. For instance, the OTA saw a return of investment of 13,000 times. To put it another way, if you had invested $1 when it was given to you, you would have made $13,000. And that, my friends, is really huge. If you are still here, you must have enjoyed the video, and I hope you will enjoy our next video that is being displayed on your screen. Till then, goodbye for now.